start you guys out with a little bit of news. It was from yesterday. There was a bear sighting on Wall Street. Wrong. What happened? Sold off, down 80 handles to buy the dippers. They figured if Trump's going to China and he's bringing all these execs, what could go wrong? And then you throw Jensen Huang in there, and we got a rally, touching the all-time high. We'll cover who he went, what he may talk about. We'll cover some earnings. We'll talk about hardware, right? Again, a little bit of pullback yesterday, more in the after hours, right back. We'll talk economics at 8:35. The chief economist of Stock Trader Network, our one and only Blue Putnam, will be joining us. The Brentster's back. Be running smooth today, folks. Pre-market prep on a Wednesday.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Here we are again with our TradeStation charts. Born to trade, chart, analyze, customize, all-in-one platform. Trade smarter, move faster, and stay in control with the platform built for serious traders. Folks, you see it. We're in the green. 18 handles matching that all-time high in the pre-market session. Not getting me to call double top. I'll never call double top again. The buck is showing some green. That's up 17 cents. Trying to break out from the highs of last week. TLT flat, 84, right back at the low of the move. USO down 84 cents, dragging down oil stocks a little bit, 143.49. GLD and SLV, they kind of have been having their own character last few days. GLD down slightly, $1.63, 431.30. SLV up a quarter, 78.80. And Bitcoin, we're still hanging out the 80K handle. We talked about building a bid at 80K. Well, we're starting to get one, folks. So here is a quick rundown. Triple D, come to the stage here, buddy. I worked the after hours show yesterday.
Yep.
You're a little bit under pressure.
Yep.
But that's when you trade your best, is when you're under
Sometimes.
pressure.
It was slow, though, and I had to go. My kid was playing hockey, so I had to leave early here, too. So I did okay. I came back a little bit, but it wasn't a great night for me here, though. But I had a better day than Brent did. Bring Brentster in here because he was in court all day.
Oh,
that's
my
fun.
Lord.
Jury duty. Did you get picked?
Oh my gosh, it was wild. I didn't get picked, thank heavens. I've done jury duty. I got summoned for jury duty one time before. I didn't even go into the courtroom. This time I went in the courtroom. I was there all day. The case was for drag racing. Somebody was drag racing on Gratiot. I'm sure people have been drag racing on Gratiot for years. And somebody, unfortunately, killed a couple people, injured another person. I was so glad not to be in that jury selection because it was going to be at least a 4-day trial. There was already like family members out in the hallway outside the courtroom. It shook me up a little bit last night. Just, a reminder, you got to be thankful for what you have because, not everyone's so lucky out there. And, people have to deal with some pretty crazy things. We should be all so glad we have each other and we get to enjoy trading and consuming information and
gives
news.
you perspective on life right there.
Exactly.
Yeah.
I know.
Yeah.
I'm glad to be back with y'all.
I'm glad you're back here, Brent. We need you back here because there's been lots of news here. The news continues to come here overnight. Yes, the night flight has occurred here. We're not just talking about the chips because the chips flew overnight here as well. We are talking about President Trump on his way to China with CEOs. These are the CEOs who are on the plane. Elon Musk. Jensen Huang is on the plane. Yes, he is, because some people thought he wasn't invited. He is. He is on the plane. They stopped and picked him up. Tim Cook. Larry Fink from BlackRock. Steven Schwartzman from Blackstone. Kelly Ortberg from Boeing. Brian Sykes from Cargill. Jane Fraser from Citigroup. Larry Culp from General Electric. David Solomon from Goldman Sachs. Sanjay Malhotra is there from Micron. And obviously Cristiano Amon from Qualcomm makes it 2. So, I mean, there's your CEOs who are joining Trump on this historic journey to China. We believe Fee has reported the plane has safely landed.
Thank you,
Thank goodness here, because this is our entire economy on one plane. We put all our eggs in one basket. I always talk about diversification. They definitely didn't diversify this flight. But wow, man, that, my friends, was a big move in the markets here last night when we found out that Jensen Huang was indeed on the plane.
What a crazy thing. Like, the whole market rallies. I mean, we think this is what is moving the market this morning, correct?
I think so, because we had the markets down significantly here last night. Like, not down the markets overall. They were down a bit, but what was really down last night was Micron and SanDisk and Qualcomm and Western Digi. SanDisk was down like 35 points last night at 8 p.m. Bring it up, Joel. You'll see it on the charts, the heavy dip last night. Micron as well, if you bring up that chart from last night too, was trading down in red. Well, when they reopened at 4 a.m., they were all higher here. So they obviously came in with their buying the dip shoes on last night. And I do think a catalyst is that all these people are on the planes. But they big drops. So you're looking at that from the noon. But if you circle just a little bit further, you know, you can see the after hours in there, the dip after hours. That was a dip from yesterday, which
that's right. Oh, yeah.
They buy all.
So not too many dips in here. And also the rally from, I mean, that was an impressive rally yesterday. And you were just kind of watching it, and it was really impressive. Here, let me redraw this for you. And then when we were talking about it, working the after hours show, I'm like, like, you think people are getting excited about Trump going over there? And we just had the best meeting. Actually, she and I are going over to open the Straits of Hormuz right now. We are heading over there. I mean, who knows what's going to come? I mean, with these kind of things, like when a company,
you do know though, Joel. Positivity. He's not going to go over there and say, "Oh, this was the worst meeting ever," and we're firing China into the sun. He doesn't want to tank the market. It's going to be positive coming out of there. No matter what, even if it's a negative meeting, he's going to spin it positive because that's what he does.
And clearly it's business focus. He brought 15 execs of some of the largest companies in the United States. So we didn't, I don't know if we like exactly said it, but you know, they must be talking about making deals in business, or else why would he have invited all these execs?
It's all business. I mean, this is the most business you can have. These many CEOs on a plane together. I've never seen this before. You know, this many major CEOs all going over there. This is an incredible, like, economic feat here to bring all these CEOs from so many different parts of the economy as well. It's not just AI. I mean, Boeing's on the plane, General Electric on here. You know, obviously talking BlackRock and Blackstone on here as well. Goldman Sachs, Citigroup, Cargill. So it's not just like an AI meeting. There's all kinds. Like, he's got a broad, diversified, you know, portfolio of CEOs here on this plane with him.
And you know, it wasn't the General Mills.
Unfortunately, General Mills CEO did not get invited here. That stock just continues to go lower every single day. We were talking about this in the think tank. 7.16% dividend. They just hate the stock, but this is not General Mills. Brett, you're going to ask something.
Yeah. So do we right away just include all of these companies on our Trump watch list if they weren't already on the watch list? Like, I don't know if GE Aerospace, Larry Culp, was necessarily known as a buddy for Trump, but right away, add it to the watch list, right?
I think so. I think you just got to, I think you do. I think you have to add all these companies to your watch list here, because all of these companies could have announcements. They could say stuff. I don't think it's imminent they're going to say stuff this week, maybe, or maybe it's later, because the meeting starts. We believe the plane landed. We believe the meeting starts today, and then obviously goes into tomorrow. You know, so maybe we start getting some headlines coming late Thursday, Friday, maybe over the weekend here.
Probably,
but it's something to think about. I mean, there's probably some positives that are going to come from this, you know, and maybe it's, you know, business. Maybe it's just, you know, like Intern was saying in the chat, maybe it's as simple as being on the FXI, which is not trading higher. Like, maybe some good things, positive things said there about China, and maybe that goes up here as well. But, you know, there's lots of trades to be made off this. But one thing for certain is this market likes to find a reason to get bullish. And a lot of these CEOs who are on this plane are some of the stocks that have been doing the very best. NVIDIA, new 52-week high. Micron gets the dip for one day, one night, now back to new 52-week highs. I mean, again, the list of CEOs here is just broad. Tesla's been on a run here, obviously off the highs, but it's been on a run as of late. I mean, it's not a bad thing that Elon Musk is on this plane as well. There was like that worries that there was, a falling out, a year ago. That's obviously not the case anymore. Qualcomm CEO, not a bad thing. Tim Cook on there, not a bad thing. So keep that in mind if you're shorting these stocks or if you're trading these stocks on the sell side. Probably potentially positive catalyst here with this plane ride.
All right. Well, we covered that pretty good. Do we want to do some after hours earnings, or do we just want to go with the big move?
Go to Nebius right away. We'll go to the one this morning. Everyone's talking about Nebius. It's a stock that we've liked for a long time. I've been in and out and in and out. I love trading it too. I was in it last night as well. Sold before the earnings works. I didn't want to take it through, but holy cow, what a move here for Nebius. New all-time highs. They love you or they hate you, and there's nothing in the middle.
Sales were strong. They beat 399 million for sales. Analysts were looking for around 388 million. We don't really have a clean comparable for the bottom line figure, but I do see an adjusted net loss of about $100 million. That was larger than the same quarter for last year. I don't see that they gave any guidance.
You know what is amazing? And this is, just we are in a market where it's about story, it's about hope. There are certain stocks, and again, when stocks are running and they're in bull markets, and they're obviously running on story, valuation doesn't matter at all. It could grow into this valuation one day, but just to give perspective here, how much revenue do they have in the quarter?
They had about 400 million in sales.
And the stock, as of the close yesterday, not counting the move today, had a market cap of 44 billion with a B. So 44 million in sales, basically 400 million in sales, 44 billion market cap. And then, now you're tacking on another onto that market cap. You're probably tacking on another 20% here. So it's over $50 billion market cap. It's incredible. That the way we value some of these companies here so quickly here. I loved it when it's down 90, 100. It's come a long ways here now, but I mean, the party just continues. Stocks are breaking out to new 52-week highs on good earnings, and the earnings are fine. The guidance is still, looking for, a lot more revenue here as well. And I mean, that's what we have to consider too, is that they got some big contracts coming in here, Nebius, and the guidance. Did they give guidance, Spencer?
No guidance that I saw. Which
Okay.
I think is pretty normal for Nebius. You know what? They did give CapEx guidance. I see that they gave CapEx guidance about 25 billion.
Yeah. I mean, we know the big contracts that they had. Obviously, NVIDIA's and 22 giving me heat in the chat room, not allowing me to finish where I was going here. Sorry, buddy. But I was going to go into, they do have those big contracts. And that's why I was talking about this stock back at 100. They had the Microsoft contract, I believe it was Meta as well. And these are in the billions of dollars. So billions of dollars of revenue are coming here. So at least if those contracts hold. So it is the point, being that these companies are growing and they're getting new contracts, and there is the potential for this to grow into this valuation here. But man, we are really good at valuing all of those future contracts immediately in the stock price, Joel. That's this market here right now. We give it all the benefits of the doubt, everything. I mean, none of these contracts are ever going to get canceled. Microsoft doesn't have any issues at all. I mean, this build out's going to just continue here, but it's been an incredible run for a lot of stocks.
All right, blowing away the expected move at $20. So that would give support at 189. You're well above that. Pre-market high as we speak, 214.44. Just keep an eye on that pre-market high and use that for follow through. I mean, that's really the only thing I can give you. Straddle riders under stress today. I'm sure there'll be some violent reversals, right? But the only number I can give you is 214.44. That is your all-time high made in the pre-market here in NBIS.
CoreWeave trading higher on this. IREN trading higher on this. They already reported these companies, so don't expect 20-30% moves because we already know their numbers. But these are two stocks that I pair up with these a lot of times here, and these stocks have been on fire here as well. I mean, CoreWeave has actually been weak since its earnings report here. So I wonder if this doesn't get people interested in here. And again, it's hard to keep these stocks that they love down here. CoreWeave is still, I would throw in the loved camp. And IREN, same story. You know, IREN had that offering, depressed it back at the end of March here. That's all forgotten here. The stock's not far from its 6-month highs here as well. Any technicals on any of these, Joel? Strike your fancy.
Yeah, I mean, they've already reported, right? First, so I'll just do the simple, the check back here for IREN. It did have its earnings. It pulled back. Let's just call it $12, $6. See, I'd like to see it get up to the $59 area, and that's actually where you're getting now. So a little bit of a retracement after the move. So 59, mark that, get back half of the move, and continue higher. And then you said CoreWeave, same kind of thing. They're not the main mover. CoreWeave has had a nice decline after its earnings report. It is down. It had a 28-point decline. So let's just call that 14. 14 off that low would take you to the 115 area. Hasn't reached that. That's what I'm looking at stocks that have it, are definitely, short-term uptrend. Hit a level, pull back, see if you can get back that lost ground.
Also reporting earnings, we're going to go fly through 3 or 4 of these here now. Alibaba reported earnings here. It's disappointed the street once again. I think Baba just cannot find its way here. Stock trading down here. Brentster, give us the details for Alibaba. It's probably not in US dollars.
They actually did give it in US dollars in their press release. Thank you to Alibaba. 35.3 billion in sales. Analysts were looking for around 35.2 billion in sales. So a pretty modest beat there. They reported earnings of 9 cents. I don't have a clean comparison there, but they did report just a penny in the same quarter last year. Did they give guidance? I'm looking through the press release right now. I don't immediately see guidance that Alibaba gave. Shares trading down about 2% this morning.
Strong cloud, strong AI growth here, but overall revenue is not that impressive here. Overall earnings not that impressive here. Stock is leaking here just a little bit in the pre-market. Joel, I do have a little bit of this in my long-term portfolio. It's a small position. I had a bigger position. I had sold some up at 160. I've considered rebuying the shares that I sold to get up to a normal size position in that, but it's just not showing me a lot of light here.
It's just
kind of stuck.
Blah.
Yeah, like, blah.
Like what are you gonna, up 145. I'll just look at this from way under the expected move so far of just over $8. But I can't give you a little identifiable area of support here. You are coming into the 50-day, which is below the 200-day, so that's not a good thing. And then you had buyers here at the 130 area, going back to the end of April. So if you've been looking to buy this stock on a pullback, there it is. But really, just we don't talk about it anymore. It's just we haven't talked China stocks. It's just
out of favor.
Out of favor,
right? Yeah.
Stocks are in favor or they're out of favor. We can continue to go through this theme here today, which we will do. But there's stocks, that, like it's hard to get once you're like not liked by the market. It's so hard to get back into the like group here.
Yeah.
And I mean, that's what momentum markets are all about. Momentum to the upside and momentum to the downside. So as much as you're seeing the S&P strong today and saying, oh, it's another great day for stocks. No, it's not. It's a great day for just some stocks. It's been a bad market for a lot of stocks. And one of those stocks, we talked about a bit of them yesterday. It's anything that's like a lot of stocks that are linked into oil, a lot of stocks that are linked into the real economy. I mean, we've been talking about the retailers. Like bring up Lululemon. It goes down every day, no matter what. Market goes up, Lululemon goes down. Market goes down, Lululemon goes down even more. This stock just goes down every day. Started the year, and everybody's saying maybe the rebound story at $216. It's been cut in half again, down to $125. This may be the worst story in the entire. Is it in the S&P? If it's not in the S&P, I don't know. But this might be the worst story of them all. We're back to where the stock was in 2019. They've taken the PE multiple from 45 down to, oh God, is it single digits here now? It is. It's down to 9 times earnings here now. And this is what happens when you have growth, when you have explosive growth in stocks. Valuation doesn't matter at all. They're just going. When growth starts to slow, this is what happens. And we've seen growth start to slow here at Lululemon, and then they take it down. And we've been saying, is this the next Under Armour? I think the market is telling us that it's not an if, it is the next Under Armour, because that's where it's taken it to, is basically down to single-digit multiples here. They absolutely hate this stock. I have no idea what can turn the Lululemon story around, but it appears nothing.
What are the old, like, did we do the end of the cap, the recap of the year, and we'll talk about the worst CEO hire of the year. It's when they brought that Nike exec over.
It was a disaster for it. I mean, we talked about that live, and it popped $7 or $8 on that. We talked about it live in the think tank, and I was like, this is good news? I'm like, I don't think this is good news. And the stock went up from like 155 to like 165. The next day opened lower and has not recovered ever since. I mean, what are you thinking? Like, the Nike has been maybe the worst retail run stock here over the last 10 years. You know, it's sitting on 52-week lows as well. So we give a lot of hate to Lululemon. Might as well give them the hate to Nike too, which is trying to break down to new 52-week lows. And it looks like it's going to fall off a cliff. I mean, it really does. Like, no Nike CEO to be found on the plane, no Lululemon CEO to be found on the plane. And these two stocks just are epic disasters. I mean, Nike's a whole rounding bottom, just getting ready. Like, that looks like it's ready to fall off a cliff. That looks like a short. I mean, it's hard to say short Nike at $42 and the stock was 65, but holy crap, does that look bad? And let's even go to K10, TJ Maxx. I mean, this is how crappy the stock market is right now. TJX is going down. This is the best of the best. I mean, it's going down here right now. What is the retail? What are they telling us? Are they telling us the consumer is struggling here? Because
Absolutely.
all these stocks.
Absolutely.
I think it's telling us a different story. Again, the tale of two economies, the AI economy and then the real economy that's running. And it is hurting. Like, you go out there and talk to people. Like, I don't know, maybe in Canada it's different here, but you talk to like builders and stuff. They're like, it's slow. I don't think it's just a Canadian thing, though. I think it's a thing that there's a lot of businesses that just aren't doing that great right now. If you're in AI, you're killing it. If you're not in AI, it's slow.
Look at Burlington stores.
This is the best of the best.
Like the off-brand too.
These are stocks that have been unbelievable.
Mm-hmm.
New 52-week high for BURL 3 weeks ago. It just fell 65 points. It just fell 20% in a month. So as much as it's been so exciting to be in these AI names, man, if you're in like value, real economy stocks, you're not participating, not nearly as much. There's a few exceptions here. Some stocks that have been holding up okay. But I mean, these retailers are not. And it's telling us the consumer is maybe just struggling a little bit here. Like, I mean, Costco has none of it. Costco, Walmart, maybe it's Costco and Walmart just eating the lunch. Everybody's only going to shop at Costco or Walmart in the future. Nobody's going to shop at any other store. But right now, it's separated. We always had the off-price retailers that were holding up really well too. But that has changed as well. Dollar General, Five Below, all these stocks, Ross Stores, like is another one too. Ross is a fantastic company. It started going down here as well. So, I mean, people can say this is boring, but Gamma, there is two sides to this market. We are traders. You can make money shorting stocks too. So, when you see Ross starting to roll over here and you can see what's happening, there's opportunities there as well. So, I mean, boring to, a long-only investor is one thing. But there is a lot of traders that we're speaking to as well here. And when you see stocks going down like this, there's opportunity on the short side as well. There's two ways to make money in this market, both up and down.
Okay, so the Gamma Rocket is saying retail for old farts. Give us some retail for new farts. I mean,
this is Costco and Walmart. Like, go through like the XLRT. Like, where is the new sexy retail stocks? I'm sure there's a couple of them out there. I'm sure there's some small ones.
Like what? And I want to ask the chat too here. Like what?
And Amazon,
how do you feel about this? I mean, do you think this just doesn't matter? It just doesn't matter that the consumer.
It may not.
It doesn't.
Maybe
the market's telling us it doesn't.
The S&Ps are totally telling us it doesn't.
Yeah. Yes,
because it's telling us. And the question is AI just going to come in and eat more lunch here of other businesses as well? Is it AI versus is the AI economy versus the real economy? Is that kind of what's happening here? Is that what's happening? There's so many other stocks. You're in the good stocks or you're in the bad stocks though, and that's it. There's not a lot in the middle here. We talked software's maybe stuck in the middle here because software is getting dragged up here now by so much strength in the Qs. But I mean, even that, IGV is still off significantly from its high it made in January here. So even though software has bounced, Stocks like ServiceNow, no bounce to be had. Stock like Salesforce.com, no bounce to be had. Stocks like Microsoft have bounced, but still not great here. I mean, tale of two markets here. You're in those chips, you're killing it. You're in other stuff. It hasn't been that great.
I don't personally think they're, the trendiest or anything, but I feel like Wall Street thought on holdings was trendy, the ONON, right?
At one point in time, but that's
maybe
been garbage
6
now
months
too.
ago. Yeah, I know, right?
They just turn around and eventually they start hitting all these. Urban Outfitters was
Well,
hot.
yeah, let's go through
Abercrombie
the-
and
let's
Fitch.
go where
Abercrombie
you,
and Fitch. This
yes.
is one for you too. What are you going to say, Joel?
No, I was just the two stocks I was just going to mention. You just mentioned.
We think alike. Abercrombie and Fitch was the hottest thing. 2024, I hit $196. It's $73. I mean, is there a play where eventually these stocks start to turn around? Maybe, but something's happening here. Abercrombie and Fitch is a PE of 6 now. Like these things just continue to go down. Best Buy, do you think they're selling a lot of technology stuff? Probably. They're the house for technology. 6.71% dividend. The PE on Best Buy is now 8 times earnings, forward earnings. I mean, all these retailers are under 10 times earnings here now. This is cheap as some of these companies have ever been. So, I mean, if you think maybe there's a bubble over here, maybe there is a turnaround story in some of these other stocks here eventually. But holy cow, I'm so impressed with just how, violent this, sell-off, has been in a lot of names, and nobody's talking about that because the media only talks about the good things. But there is a lot of pain out here right now too. Imagine being a value investor and saying tech is overvalued, like this whole AI bubble is happening here. I'm just looking at the chat here. Somebody was just mentioning that if you're not in AI, you're being left in the dust. Like if you're an investor and you're not in AI, you've been really left behind in this market.
All right, we got PPI. PPI.
2 minutes. Is that going to move anything? Does he even care about PPI?
I don't know. Probably not, but I'll give a little preview here. We are expecting a base reading month over month up 0.5%. The core reading, which excludes food and energy prices on a month over month basis. This is going to be for April. We're expecting a 0.3% increase year over year. The base reading up 4.9%. And the core reading, we are expecting up 4.3%. We do have about 1 minute here until we get our PPI data points at 8:30.
Obviously, TLT, IWM are all sensitive to economic data, but IWM's doing pretty darn good too here. I mean, as much as we've said there's a lot of stocks not doing well, you got 2,000 IWM small caps that are not far from all-time highs. So, I mean, there is, some good stuff, happening outside of tech as well, I guess, but it's like it's selective. It's like it's good and there's not so good. I mean, biotech's been great. XBI has been holding on pretty well here. I mean, not in the last month here, but it's been a pretty good place to be here too. So it's a funny market, and it's a tricky market unless you've just been loaded up Micron, AMD, SanDisk. You're probably underperforming unless you've got a bunch of those stocks in your list. But I mean, maybe it was just obvious trades like Amazon. Back when it got to 22 times earnings, when it was $200 just a month and a half ago, dirt cheap. Shout out again to Chris Camilo who called that one. Nvidia, we talked about this, 17 times earnings on $170. I mean, some of these are maybe just no-brainers, and now they're going, and people are like, man, why didn't I buy those things when the valuations got that cheap? Well, they did. Here comes PPI. Let's see what the numbers show. I'm not even going wide. I'm out there. Pick me off, HFTL goes. Pick me off.
Oh. Hot reading. PPI up 1.4%. The core reading up 1%. That is a lot hotter than expected. We were expecting just a 0.3% increase. This is 0.7% over the Economist estimate on a year-over-year basis. Base PPI up 6%. Core PPI up 5.2% year over year. Economists for the year over year core reading, we're expecting a 4.3% rise. Futures falling maybe 10 points, maybe 8 points. Are we rebounding already?
No, not really. But S&Ps have down a little bit here. But, like the Microns and the SanDisk, do they give a crap about this? Hell no. But the real economy stocks do here. So all those stocks we were just talking about, not going to be good for XRT. Probably not good for your IWM. probably not good for your interest rate sensitive names. There's a lot of pressure on those things here. And inflation is real here. I mean, it's got to come through here. Like, did you see like over month, they were showing the numbers or year over year numbers for airline tickets are up 19%.
Oh,
I mean,
wow.
What are you supposed to do, man? I'm like, you're an airline here. You got to pass this crap through. Unless you're the best hedger in the world here, it's going to be tricky to not pass this through. But we are rolling over here. I just don't see those main stocks carrying, though. That's the biggest problem.
Mm-hmm.
Yeah, it's I mean, we had some action on this. I hope you didn't leave too many bids out there. But what
I canceled after the fact. I was like, okay, I do cancel.
Oh, you did? Yeah, like,
after I saw the SP start to fall. And we're not falling far. And again, are they going to just come in and buy the dip on some of the beloved names? Probably.
Shaking things up here. This is the plane has landed and the PPI numbers. I mean, that you're talking super hot. 1.4 versus 0.5. I mean, that's a triplet, folks. That cannot be ignored. And here we are. We are coming back down. We're red. We went red. So now I will call double top in the S&Ps. 54.75 on Monday, 54.25 in the pre-market session. TLT in the red here by 19 cents. Let's take a look at the IWM. IWM down 85 cents. That's 0.27%. So that's getting hit a little bit more. But is Blue ready? Because
we need our economist
is better
here
to have on the day of a super hot PPI number than the chief economist of the Stock Trader Network, Blue Putnam. Got that bass in there. Hey, Blue Putnam, chief economist for the Stock Trader Network. Come on such an appropriate day. Blue, how are you?
I'm doing fine. Much better than the PPI.
All right. So I was all set to talk about the resilient economy. And we're talking about oil prices. And now we're worried about inflation. But Blue is arguing the U.S. consumer could absorb a 53% spike in gasoline prices without cutting back elsewhere.
Well, they can do that.
How is that going to happen?
The consumer can do that as long as they think the Strait of Hormuz is going to get opened up fairly soon. This is the real key, because when you get a shock, gas prices go up 50% or something like that. You got to go to work. You got to do your errands. You got to do everything. But if you think it's temporary, then you keep spending. And that's what the consumer did. We only have the consumption data for March, but we know that non-durable goods, that's gasoline and all these discretionary things, spending went up huge on those. So that, they're going to spend what they have to spend. But spending also went up on durable goods and, a lot of other services. So the consumer just dipped into their savings for a month, and they probably did so in April too. Whether they do it in May and June, that's another question, because every week that this Strait of Hormuz is closed, sentiment about it changes. And if you think it's temporary, you dip into your savings. If you think it's permanent, you don't go out to eat, you don't get on that jet plane, you don't do a lot of things that are discretionary.
All right.
And maybe that's it, like discretionary spending, like we were just covering the XRT and some of the retail stocks, and they are all a lot of them making new 52-week lows. I mean, Home Depot, which is discretionary spending to a certain extent. I mean, if your roof's leaking, you're going to go fix that, but you're not going to take on that new project here. I mean, Home Depot just made a new 2-year low here on the stock here. So, you got some stocks, that definitely not AI related here, not doing very well in this economy. Does this continue here, or is it if we get the Strait open next week, maybe we have a great meeting over there, they figure out how to open the Strait, does everything just turn around on a dime here? Or, what are your thoughts here? And what happens if we don't get the Strait open anytime soon? Like, does this continue?
Well, that's really not good. So what we have now is that the hourly wages, things like, how people are getting paid, are not keeping up with this inflation surge. So, again, if the Strait doesn't open up and you don't get some relief, then people are going to have to change their behavior fairly dramatically. And you've already pointed out the stocks that are down. They're going to be down further if the Strait doesn't open up, because that's where it hits first. And then, it's going to hit on the employment side. We haven't seen any impact on employment. The April employment number was pretty good. It supported the March number. But we're still, my guess is we're creating just 50, 60,000 jobs a month. That's not a lot, and will be very easily to slip into a recession. But that won't happen if the Strait opens up. But if the Strait doesn't open up in, I would say 4 to 6 weeks, then the resilience story is going to be a lot weaker.
Do you think the AI economy, which we've been talking about, the tale of two economies, the AI economy and then the real economy, do you think like stocks like Micron, SanDisk, they don't appear to care about any of this data? They just go up no matter what. Micron's barely selling off on this hot data point here. Do you think the AI economy can make up the difference, or is the real economy too big? And if we just keep oil prices elevated and keep that straight closed, eventually the stock market is going to start to listen to, the problems that the real economy is suffering here right now?
Oh, yeah, I think in the long run, the real economy wins the day. But even in the AI stocks, they've run up so much. They've borrowed so much money. The promises on the data centers are way overdone in my view. So they're on their momentum run right now. But the fundamentals behind them, it's the law of diminishing returns. They can't run that much more given how fast they've gone. So even the AI stocks could hit a problem if the rest of the economy hits a problem.
All right, let's turn this to the Fed, Blue, and supply shock, inflation event. We kind of know about those, right? And not really a demand problem. Do you see Kevin Warsh in the Fed maybe about repeating a classic mistake and hiking rates into an oil shock that monetary policy really can't fix?
Well, monetary policy definitely can't fix supply shocks. And this is a supply shock. Now, in the pandemic, we had a supply shock, and then we piled on $5 trillion worth of stimulus and got the inflation. So, that's a different story. But Kevin Warsh, I cannot see him raising rates on a supply shock. How to get on President Trump's bad side within minutes, that would do it. I just can't see it. But I don't even think it's the right move. I just don't think raising rates into a supply shock. Raising rates, the idea is you want to slow down aggregate demand. I don't know why you would want to make the consumer worse when the consumer's already struggling. So I can't see the rates going up, but some people do. And there are central bankers out there that believe no matter why inflation is going up, you have to react with higher rates because you want to shut down inflation expectations going up. They use phrase like we have to keep inflation expectations anchored, things like that. So there are going to be people on the FOMC that will argue for higher rates. I just don't think they'll carry the day.
Like to make comparisons to different periods, right? And you can compare that the 2001 slowdown led to the 2008 financial crisis. Right now, banks, even though the charts look horrible, seem to be pretty well capitalized. If we don't get these streets of market economy, what is going to stay? Let's say this stays disrupted, through the summer. Is it the retail? Is it the banks going down? Is it the real economy stocks? And can the AI, what would you say is overblown, offset all that?
I don't think it can offset it. It certainly offset it so far.
Yeah.
So, it's been doing really well on that. And the chips and so forth are leading the charge. But, they have gone up so high. Anyway, they're in the zone where, I'm viewing them as pure momentum right now. And if the story changes, they can move pretty fast in the other direction. But AI is a real story, and it's really happening across the economy. Now, we are getting more productivity out of this. So, in the long run, the economy is going to be better for it. But, trading stocks right now where we are, that's a more difficult question. But if you look at what AI disrupted, the most, in the last couple of months, the disruption has been in the software as a service stocks because, with AI, you can build their products maybe cheaper, maybe customize them. There's going to be a lot of competition. So that's why it's gone straight to the data centers and the chips and everything involved with that, rather than the companies that might use AI. Even companies that think they can use AI, they're being really careful. I mean, AI still hallucinates. By the way, that just means it makes big mistakes. And even if they were 99% accurate, 1 out of every 100 people are going to die on that airplane. I don't think you want to do that in certain businesses. You know, there are other businesses you could take a 1% loss, but some businesses really have to get it right. And they're not going to be able to implement AI all across everything yet. So it's going to take a while.
Okay, Blue, I want to get your charts up here and get your nifty graphs that you did for us and run through these real quick. And what do they say? A picture is worth 1,000 words here, Blue. Let's talk about it here. What are we? I gotta share them. Let me get my
Yeah, we can
screen.
just blow through these.
Okay, we will. I got it.
You had him up. Joel's just getting them up here. Technology. Joel fights that sometimes here, but he's going to get them up here for a second here. So Joel,
Well, he's not an AI stock, you know.
No, I definitely not. Here we go.
All right.
Boom.
So this is the CPI, up to almost to 4%. But notice it never got down to 2%. So we're going up before we even got to the target. Let's look at the next picture, though. So this is wages. You know, the wages, the trend wage is just under 4%. So in the latest data was less than the CPI. Wages are not keeping up. And that's the real economy Dennis was talking about. This could put us in trouble if we don't get some relief soon. Let's look at what the consumption did, though. Next chart. So this is personal consumption expenditures, and it's the monthly change. So what you can see in March, that's the last data we have, is that we had a big rise right there at the end of the chart. Where did that come from?
Yeah.
If you look at the next chart, you'll see it. It came from non-durable goods. That's gasoline and things like that, stuff you absolutely have to buy to keep your life going. But we did have increasing spending in some of the other sectors. So that's what's going to give up first. So, and that's why these big box stores and things like that and Home Depot are looking not so good until we get some relief. Let's go to the next chart and see what happens with the markets. This is jobs. Sorry. We had 2 good months of jobs in a row, but the jobs are pretty slow. We already talked about this. The trend is not upward. It's a zigzaggy line, man. Even 2 months is not enough to convince me you won't get a zag down. I mean, if I had to forecast next month, you guys can hold me to this because I'll probably be wrong. But, I'd be looking for a negative jobs number in May. We'll see.
All right.
The trend is not your friend here.
No, the trend is not your friend. This is the implied Fed funds rate on the end of the chart. We're back to where rates are. And everybody knows that. That's what, inflation is up, bond yields are up. The market's basically saying the Fed's on hold, which I certainly would agree with here. Let's look at the bond market, though. Next chart. This is the 30-year. As of a few minutes ago, I think we're at 503 or 5. We're just above that 5% line.
Yeah.
With these latest numbers, but you can see we bump up against this 5% line all the time. If again, we're bipolar on this thing. If the Strait of Hormuz stays closed, we're probably going up to 5.25, maybe even a little higher. If the Strait of Hormuz opens up, even though it may take a year more for the inflation to come down, the bonds are going to react right away, and you could go back to that 4.5. We are not staying where we are. This is not a stable place.
Let's talk long-term rates versus short-term rates for a second here, because obviously the Fed controls the short end, the long end is kind of controlled by the markets here. If they start, like, let's just say, inflation does start to, get out of control, like, are we in a situation here, though, where the Fed's hands are going to be tied anyways because, war is just coming in and the president definitely doesn't want rates to go higher here? I mean, and then what happens with the long end? Like, I mean, if we start seeing inflation start to ramp up even more, which we just saw with the hot PPI number, does, like, does all of a sudden, the inflation, like start to TLT, and rates, long-term rates start to go higher to offset it? Like, what happens with the long end if PPI starts to continue to go higher?
Well, the long end, the yields go up and the prices go down. I do want to be a little careful on this, though. We're talking about a supply shock. These are relative price changes. So all the fuel costs go up, but your price of some other things don't go up unless they need, delivery services and jet fuel and things like that. And as long as there's no fiscal or monetary stimulus to cushion this, the inflation rate will come down. I remember back in 2022, I was telling people that inflation was temporary, but you had to believe temporary was 3 years. In this case, temporary is probably 18 to 24 months before inflation will come back down to 2.5 or something. So the bond yields are probably asymmetric. That is, if the Strait of Hormuz stays closed, bond yields go up. If it opens up, they could go down way more than they went up. So it's not a symmetric outlook. It's bond yields drift higher if inflation goes higher, but if we have a recession or even a really good slowdown, bond yields could drop 0.5 point fast on the 10-year and the 30-year.
All right, we don't like to mention these words, but you have to. Chances of a recession, stagflation. I know it's dependent on oil and when the Straits of Hormuz open, but where at? When someone comes up to you, you hop in a cab, you hop in your Uber, they find out you're chief economist, and they say, when's the next recession coming? Should I be worried about stagflation?
I don't know which taxis you ride in, but they usually tell me what's going to happen.
Anyway, that's where you get all your information from, is the cab driver.
Oh, I tell you, they're full of information. I mean, they talk to hundreds of people every day. I'm not kidding. It's a very good source of public opinion.
For sure.
And of course, I like to talk, so we're talking on the whole ride. But yeah, my odds on recession are like about 45%. I just don't think it's going to happen. And if it does happen, I think it'll be pretty mild. But man, we're getting close. If we're not out of this stuff by June, I got to flip this,
Okay.
It's funny that we're sitting here and we're talking about the possibility of a recession. We're talking about and the S&Ps are at all-time highs. The IWM all-time highs. Is the market this disconnected from reality here, or is it just like we're at just AI is all that matters, and the AI bubble continues to keep stocks elevated here? I mean, it's like with after just speaking with you for 10 minutes here, you'd think the S&Ps are at like 52-week lows here. We're at 52-week highs. So it's hard to for an average person that's an investor in the market to see all this potential like downside catalysts here with the stocks at all-time highs. What makes the stock market start tracking maybe where inflation in the economy is headed?
Well, it's when the narrative changes. So the narrative right now is that AI is great. But as you were pointing out earlier, we have two stock markets here. We have a tech market in the chips and related AI, and then we have everything else. And the everything else is not so good. So when you have that kind of a market, it is extremely hard to beat the index. So people will move into the index because their stock picking has to be near perfect. So I feel like we're in uncharted waters here because of the disconnect between the economy. But AI is absolutely for real. So I don't want to go too much against AI, but I just think it's overdone at this point. We've seen that, by the way, in private credit. We had the Blue Owl disaster. We've had private credit breakup. Private credit is very much tied to equity in these companies that haven't been doing well. So, but the flip side, I'm sorry, I'm a two-handed economist this morning. I'll try to get rid of that.
That's all right.
But we're going to get some really big IPOs. We're going to get SpaceX. We might get Databricks. We're going to get a bunch of these things that are really great companies that have stayed private. And the market likes, they like it when the IPOs are coming out. So there's some optimism there too.
All right. We've been on the line with Blue Putnam. He is the chief economist for Stock Trader Network. He'll be joining us in the think tank starting next couple weeks to share his wisdom on the markets. Blue, you gave me a lot of stuff to be worried about, but I'm not going to be worried because everything seems to go up, and that's the environment that we're
Stocks
in.
only go up anyways.
Well,
Who
stocks.
cares about the
Right?
economy?
Yeah, nothing to worry about. No inflation.
We love the economy. It
Got
does
CP
matter in the long
top
run, and Blue's
PPI
opinion matters here
number.
too.
You know, Trump's on his way to China. I mean, basically, that is so much more important than inflation, right? We don't need to worry about it until we need to worry. Thanks, Blue.
Thank you.
Thanks, Blue.
All right.
I mean, when you
And-
talk with Blue, you're like, you gotta just be thinking. I know it feels like, so exciting right now with the euphoria and the chips and all this. But I mean, when you really break it down, IWM looks okay too, though. So there is a lot of areas that are actually still doing okay too. But definitely the tale of the loved and the tale of the hated. It's the tale of two markets, and we can clearly see the loved and we can clearly see the hated. And I just don't know what happens if we lose some of the loved stocks. That's where it could start to get ugly here, because you got stocks like Lululemon that go down no matter what. So I don't know what turns the story around in the stocks that are hated here too. We got on the screen here the Fed, obviously looking, at the potential for rate cuts here or staying the same. Can you go out all the way to December? Like, let's go out to December and see where they're really projecting. Are we looking at more cuts still?
So, oh my gosh, Triple D, have I got a story for you? So
Please.
Let's click through, progress here. So we're looking at the June 17th meeting. We're looking at the July 29th meeting. Here's where it gets interesting. We get to the September meeting, and suddenly a rate hike. 10% odds for a rate hike in September. Look at this one, Dennis. October. We look at this. 22% chance of a rate hike.
Wow,
when we get to December, Dennis, we now have a 33% chance of a rate hike. We now have a 6% chance, a much larger percent chance of a 50 basis point rate hike.
My gosh.
Versus a rate cut. Would this be a disaster?
Trump is going to lose his stuff. Like, I was going to say the other word, but Claude would have went nuts if I swore live on the show here. And obviously YouTube algo would punish us as well. Mitch has warned us for that before, but that's unbelievable that we've come this far. And now it starts to make sense here. I mean, this war changed the entire Fed outlook here. It really did, because we were talking almost to certainty we're going to have more rate cuts this year. And with obviously the inflation that we've seen at the pumps, the pass-through inflation, which is going into food and energy, and you can see that in food, obviously. And not only that, like obviously we're talking airline tickets. We're talking about some discretionary spending too. I mean, these companies need to still make money. They can't absorb, all these higher costs here. And the consumer themselves is showing up by not showing up at these retail stores here right now. So still they go to Costco because they need their necessities. Still they go to Walmart because they need their necessities, but they're not going for their discretionary spending. I mean, you can look at stocks like Williams-Sonoma, which is definitely discretionary spending here. That stock's on a 52-week low here, WSM. So there is a lot of stocks that just, have rolled over here and started to roll over here. I think this is like the fuel prices showing up where the consumer is a lot more strapped than they were 3 months ago. So we can say Trump's saying stocks are at all-time highs, gas prices are coming back down here. They're not. The truth is stocks are at all-time highs, but gas prices have not come down at all. Gas prices, if anything, seem to be going higher here. And unfortunately, when we look at this USO and the Strait stays closed, we're perilously close to the 52-week high here. I think if USO starts breaking out, like as much as the stock market is disconnected from the USO, if it starts breaking out, we start seeing 150, 160, 170 USO, the stock market will reconnect in a hurry. So it doesn't want oil. It says we can stand oil for longer, but we can't stand oil actually going higher here. So that would be the concern for me when I think the stock market reconnects with USO, is if USO actually starts breaking out here from this consolidation period at the top, which it looks like it's gearing up to break out again.
Spot oil at 102.46 per barrel this morning here. The high was 119.48. If you're bringing that recent high to attention here, Dennis. I do have
before you go to this.
Yeah.
You know what we're missing? We're missing a very important point here, and all the things that we discussed with Blue regarding inflation. in money. And this was actually brought to my attention by one of our subscribers in the think tank, Mike Franz, who came on last week.
What I'm trying to think, Joel. What is it?
How much is this war going to cost?
Like emptying the coffers? You're saying?
I
kind of
mean,
thing?
the projected costs keep going.
Trillions of dollars you could get into if it continues.
It already is.
Like, you could go crazy with costs here, like crazy. Like, that's, and that money's got to come. That's from printing more money here. That's inflationary in itself as well. So, I mean, there's the war needs to end. He needs to find a way to get the Strait open, and it needs to end here, or eventually here, unfortunately for the stock market, the AI economy won't keep it up. So that's what you need here, is somehow to figure out how to, end this, open up the Strait, whether it's with a toll booth, even if it's with a toll booth, like maybe the toll booth's going to be there forever. Just get it open. Get oil flowing again here. Whatever you got to do. Like, give them a toll booth. If they want a toll booth because we did all this damage, they need to build the buildings, I'd be at that point and let them have it. But whatever they do, they got to get the Strait open here, because it's been too long now. And if this Strait remains closed, to Blue's point here, for the foreseeable future, saying it remains closed for months here now, I don't think the stock market can hold up. I don't think the microns, which are obviously overextended already, can continue to hold us up here. I love those stocks. The reason my account's at all-time highs is because I'm loaded up with the AI stocks too. But just imagine not being in the AI stocks right now. It's not been great.
I was pulling up the calendar here for the rest of the week. If you guys wanted to just take a real quick look at earnings for tonight and maybe for tomorrow morning, what highlights do you have on your radar for tonight, Triple D?
Well, it's going to be tonight. It's going to be Cisco. That's hardware. It's in the right category. It's loved. Dips probably get bought, and rips just continue to go here. So it's hard, actually, to bet against this name here when it's just hardware. I mean, separate it that simply. Hardware is the driver of the entire stock market here right now. Hardware stocks are up so much that it's actually eating the lunch of other stocks. I think there's actually this happening where some of these companies maybe aren't doing as bad as their stocks are looking, like some of these ones that are making new 52-week lows, but there's investors just selling those stocks to flat out move into AI stocks and to flat out move into hardware. This has been the theme. We said hardware and energy, but it's mostly been hardware. And I mean, if we were listening to ourselves back in January and February and just loading up hardware stocks, you are absolutely on fire in this market here right now. This market is just being driven by hardware. Cisco is a hardware stock. Applied Materials on Thursday is a hardware stock. There's underneath demand like crazy for every hardware name. They dip. Those dips just seem to get bought, almost immediately. They can't even stay down. And when they rally, sometimes they just continue to go. They gap and go. So hard to bet against Cisco. I think dips get bought if it disappoints, and then it breaks out over 100, and who knows?
Okay, well, heading into the open here, we've had our dip overnight, we've had our rally overnight, and then the PPI is knocked us down. So it's time for the bulls to step up here. I would just off the open, see if we can catch a bid off the open, get back above the close, hold mid-range on the session, and make a challenge for that double top. Let's not have a double top anymore. Let's take out that 70, 74, 54 and a quarter. Trying to identify support, at least in the S&Ps, for me is a little bit more difficult because leaning on daily lows, just not much down there, folks. So we'll see. We'll let the Bulls and the Bears battle it out. And tomorrow we'll be joined by Jeffrey Hirsch, Stock Traders Almanac.
Heck yeah.
See if they're creating some new precedents for that to put in next year's edition, folks. Thanks for joining us.
Go make some trades in the think tank.
All right.